All right, let's talk about Oracle. The tech giant just dropped its second quarter results for fiscal year 2026. And honestly, the numbers are pretty staggering. They really tell a fascinating story about a company that's right in the middle of this huge transformation. A story all about the cloud, a massive pile of cash, and a huge bet on the future of AI. But before we even get into the official results, I want you to look at this number, $523 billion. I mean, just let that sink in for a second. What do you think that could possibly be for a company like Oracle? It's not their revenue, it's not their profit, so what is it? Well, that number is their remaining performance obligations, or RPO. Now, RPO is basically Oracle's backlog. It's this giant mountain of signed contracts for business they're going to do in the future. And that number is up an absolutely mind-blowing 438% from last year. This is probably the single biggest sign of the incredible demand Oracle is seeing right now.
And believe me, that eye-popping RPO number, it's really just the tip of the iceberg. So let's break down the headline numbers from what was a truly incredible quarter for them.
Okay, so total revenue came in at $16.1 billion, which is a very strong 14% jump. But look at this, the earnings per share shot up by a whopping 91%. We'll get to how they pulled that off in just a minute. But the most important thing to see here is this sort of tale of two businesses. Their cloud revenue soared 34% to $8 billion, while their classic traditional software revenue actually went down by 3%.
And that contrast really leads us right to the first major reason for Oracle's success, the absolutely explosive growth of its cloud business. You know, this isn't some side project anymore. It is the very core of the company's entire transformation.
And this chart just lays it out perfectly, doesn't it? On one side, you've got the legacy software business, which is shrinking just a little bit. But on the other side, you have the cloud business just rocketing upwards at 34%. This right here, this is the perfect picture of a legacy tech giant successfully pivoting to its next big thing.
So what's the result of that pivot? Well, it's a huge strategic milestone. For the very first time, cloud revenue now makes up exactly half of Oracle's entire business. Just think about that for a second. The company that was once defined by databases you kept in your own server room is now officially a cloud company, period.
Now, that 34% cloud growth is super impressive for sure, but it doesn't quite explain how their earnings per share jumped by an insane 91%. To really understand that, we need to look at the second key driver of the quarter, a massive one-time cash windfall.
That windfall came from this number right here, $2.7 billion. This was the pre-tax gain Oracle pocketed when they sold their investment in a chip company called Ampere. It was a purely financial move, but one that had a gigantic impact on their bottom line. And if you want to see the receipts, well, here they are, straight out of their financial statements. Just look at the line for non-operating income. This quarter, it was almost $2.7 billion. You know what it was in the same quarter last year? A mere $36 million. So yeah, that one single transaction dramatically pumped up their net income and, as a result, their earnings per share.
So, we've got booming cloud growth and a huge injection of cash. But what does all of this actually mean for Oracle's future? Well, it all seems to be building into a fundamental shift in how they plan to compete, a strategy that they're calling their neutrality strategy.
You see, selling their stake in Ampere wasn't just about the money. As Chairman Larry Ellison explains here, it was a strategic move to embrace what he calls chip neutrality. Instead of being locked into making their own chips, they can now use the best tech from anybody, whether that's NVIDIA or someone else. It's all about flexibility.
And that idea of flexibility extends to where their products actually run. CEO Clay Maguire calls it cloud neutrality. They are actively building out their own data centers inside their competitors' clouds. We're talking Amazon, Google, and Microsoft, so that customers can run Oracle's famous database wherever they want. That is a radical shift from the old walled garden Oracle we used to know.
So what do you do when you have a booming cloud business, billions in extra cash, and this new strategy of neutrality? Well, you point all of that firepower at the biggest opportunity in technology today, artificial intelligence.
As CEO Mike Sicilia points out, while training these huge AI models is obviously big business, Oracle actually sees an even bigger opportunity. Their big bet isn't just on selling the raw infrastructure for AI, but on embedding AI intelligence directly into every single product they sell.
And they see this happening across three different layers. First, at the very foundation, in the software that runs their cloud data centers.
Second, inside their flagship product, the autonomous database. And finally, all the way up through their entire suite of cloud applications, from financial software to healthcare systems. This three-layer strategy is their master plan for winning in the age of AI.
So, this all brings us to the final big question. Oracle has clearly turned a corner. Its cloud business is absolutely on fire, it's flush with cash, and it has this very clever new neutral strategy for both chips and clouds. But is this powerful transformation enough? Is it enough to truly take on the dominant market leaders like Amazon, Microsoft, and Google? Now that is the multi-trillion-dollar question.